I want to show you the best performing TSP fund so far in June 2023. The C fund right now is the best performing mutual fund in the TSP with almost a 14% return year to date, right? And you can actually download this spreadsheet, and it's going to be named TSP funds, for absolutely free by visiting firestarter.com/resources. And you have to keep track of the prices by logging into the TSP, because TSP does a terrible job of updating us on how the funds are performing on a daily basis. They only update the TSP year to date charts on the last day of each month. But anyway, what this spreadsheet tells me is that since January 1st, 2023, if you have $1,000 invested in the C fund, you've made $140 in interest so far from that $1,000 you invested in January. The C fund mirrors the performances of the S&P 500 index fund. But if you're actively contributing to your TSP, your total return would be lower, like 9% or 10%, because you're dollar cost averaging your TSP investments every 2 weeks or on the 1st and the 15th, right? So the shares you're buying actually fluctuate on a biweekly basis or how frequently you get paid. Anyway, so you have to go to this TSP share price history to get the latest share prices for each fund. And I'm going to deselect the life cycle funds, and I'm just going to choose the individual funds. So using the spreadsheets I showed you earlier, you can put today's share price in C, S, I, G, and F funds. So the share price for C fund as of yesterday, June 12th, ended with $67.06 and some change, right? And I'll just put that share price in this cell here, and it tells you how much your C fund has grown since January 1st, 2023. But the most accurate chart will be in your quarterly TSP statement, because your allocation and how much you buy into your funds are different from all of us, right? And this is just a good tool to know how well or how bad the market is performing for the year. So, and let's just focus on the C fund for a minute. And here, take a look at the S&P 500 stocks with the best performing stocks so far. Okay, so right now, we've been talking about Nvidia for this entire year with the AI, and it's made over 170% return so far, which is insane. And the second best performing stock is Meta with over 125% return. AMD or Tesla with over 102%, and AMD with almost 100% return. And there's also Royal Caribbean. I know the Carnivals. All the cruises are making a big comeback. You look at GE with 62%, Salesforce, uh, let's see, Broadcom, Chipotle, Amazon, Align Technology, and all that. They've all made some really good returns so far in 2023. Tesla has been having a crazy uptrend with 12, or now it's like 13 positive trading days in a row. But only half of the S&P 500 stocks are in the green so far in 2023. The other half of S&P 500 are actually in the red, right? You can scroll all the way down and it tells you the worst performing stock, which would be Advanced Auto Parts with negative 54, almost negative 55% return, followed by Dish Network, Dollar General, Schwab, AES, Moderna, and other stocks. And as you can see here, and in full disclosure, I do own some individual stocks out of these S&P 500 stocks. This is not financial advice. Don't invest in them just because I do. So I bought Meta heavily last year when the share price dropped below $100, and it's made some really good returns this year. And I also have Tesla, which I continue to buy when the stock price tanked last year to about $105 and $115 per share. Now it's sitting at about $250 per share. And I'm also seeing a tremendous upside for Google with YouTube in particular. And ever since the NFL decided to dump AT&T's DirecTV and sign with Google to have the NFL Sunday Ticket exclusively with YouTube TV, which can be streamed anywhere in the US as long as you have the YouTube TV app. And cable and satellite TVs are pretty much dead at this point when you have all the streaming services like YouTube TV, Disney Plus, Netflix, and Apple TV, right? And I think Google stock alone will go up tremendously in Q3 and Q4 in 2023 when football fans dump DirecTV and just switch to YouTube TV so they can watch their favorite football teams, right? And I've been bullish on Google for a while now, since at least since 2021, when the stock price dropped to the low 80s, right? No, the low 80s, that was in 2022. And I became even more bullish when YouTube TV got the rights to the NFL Sunday Ticket, because I know there are about 120 million US households who watch football every season. And I'm a Raiders season ticket holder here in Las Vegas. And I know a lot of people who travel to Vegas every year to watch their team play. If 50 million US households purchase the NFL Sunday Ticket for $350 each, that alone is $17.5 billion in revenue just for the NFL Sunday Ticket. That's not even including the YouTube TV subscribers who pay the base price of $70 a month, right? Or is it $72? When I read the last earnings report from Alphabet, YouTube TV grew its subscriber count by 1.4 million people, with a total of 6.3 million active users for 2023. And I wouldn't be surprised if the subscribers doubled or even tripled by the end of 2023. So if my bullish case is correct about Google, and I wouldn't be surprised if it goes to a $2 trillion market cap by the end of 2023. And I'm also seeing a tremendous upside with Meta, Tesla, and Apple in the coming years, and which holds a big weight in the S&P 500 because they're collectively valued at almost $6 trillion in market cap. And just think of it this way: Japan's GDP is almost $5 trillion as of 2022. So how insane is that, right? But the downside is the demand for these products. If Meta comes out with a Q2 earnings report showing a slowdown in ad revenue, the stock price would take a hit in the short term. If Apple's top and bottom lines come in lower than expected, they're probably going to go back down to 2.5 or 2.6 trillion dollars in market cap. If Tesla sells fewer cars than what was projected, the share price would probably drop below $200 or $190 again, right? Could they all happen? Of course, but the chances of that happening are lower and lower, in my honest opinion. Could I be wrong? Of course. And if you look at the S fund, this one is the third best performing mutual fund in the TSP. And if you watch my previous video about my $1.9 million TSP investment strategy for 2023, I stated that I was going to invest 50% C fund and 50% S fund. The S fund, or the small cap and medium cap stocks, took a big downturn last year in 2022. And if this S cap starts to make a big recovery, I said I'm going to diversify to maybe 60 to 40 or 70 to 30 C and S funds. My criteria to move money out of the S fund requires the S fund to outperform the C fund. Right now, it is not doing that at 10.4%, which is still an incredible return. And I don't know what it's going to do for the remainder of 2023. We still got 6 months left, but I'm going to pay very close attention to it. But so let's say, for example, if the S fund performs a 20% return and the C fund performs 15% return, I'm most likely going to move some profit out of the S fund and move it to the C fund. Again, this is just my strategy. Just because I'm doing it, it doesn't mean that it's right for you too. And I'm in my mid 30s and my risk tolerance is high because I'm still 25 years away from reaching 59 and a half. So for every 5% gain, I'm probably going to reallocate 5% S fund back in the C fund, because the C fund is less volatile than the S fund. Right now, I have 50% C fund and 50% S fund. If S fund becomes heavier than the C fund by, let's say, 5%, then I'm going to reallocate to TSP, inside the TSP, to 55% C fund and 45% S fund, or something like that. If the S fund outperforms C fund by 10% or maybe even 15%, then I'm most likely going to reallocate my TSP back to the way it was at 80% C fund and 20% S fund. The most I'll probably do is 25% S fund because that's my risk tolerance. As I get older, going into my late 40s or 50s, I would be more comfortable with 90% C fund or 100% C fund. Let me know in the comment section down below what your TSP allocation strategy is currently with the bull market. As of right now, I'm going to keep the allocation strategy the same as 50% C fund and 50% S fund because the C fund is still outperforming the S fund. And I'm truly excited to see how the S fund will perform for the rest of 2023. How the stock market performs will depend on the earnings that will come out in July for Q2 of 2023. And I think inflation will continue to go back down to the normal level at 2 or 3%, right? But regardless of what happens to our economy in the short term, I am not worried about the short term catalyst because I'm not going to touch my TSP for at least 25 years. I'm only going to reallocate my TSP between C and S funds if one fund outperforms another. Either way, I'm really excited to see how my TSP grows in 2023 and for the next 10, 15, and 20 years.